Wonderful good day to the mining news, ladies and gentlemen, on Commodity TV. The tin price around $25,600 per ton is actually too low. The 3-year chart shows an interesting range formation between $25,000 and just under $30,000 per ton. With the supply-demand imbalance still prevalent, significantly higher tin prices should be in store for us in 2024. It is fitting that First Tin has just announced an updated JORC standard mineral resource estimate for its Taronga tin project in Australia. Using an operating threshold limit of 0.05% tin to a maximum depth of 300 meters below surface, this resulted in 86,200 tons of tin in the measured and indicated category and 61,100 tons in the inferred category. This is a significant increase in size of 240% compared to the previous mineral resource estimate from 2014, and which was calculated using a cutoff grade of 0.1% tin. The lower cutoff value for the updated mineral resource is based on revised economic considerations, including higher 3-year interest rates, lower Australian dollar US dollar exchange rates, and preliminary estimates of mining, processing and administrative costs. Comparing this then, this represents a 40% increase in total contained tin metal at the same cutoff. This came about as a result of the following: exploration drilling by First Tin successfully expanding the mineral resource to the southwest of the existing estimate, a new geological interpretation and reconfigured dip interpolation technique. For the first time, a measured resource category has been included. This is based on First Tin's successful drill program, which validated Newmont's drill data, and a more detailed examination of Newmont's QA/QC data, which confirmed the reliability of the historical drill data. First Tin is a clear buy candidate for us, and we see an initial price target of around 50 euro cents. The stock should complete its bottoming and pick up speed in 2024. Uranium continues to rise, and American Future Foods started phase 1 of its 3-phase confirmation drilling program on its Cebolleta uranium project located in the Grand Uranium Mineral Belt just under 60 kilometers west of Albuquerque in New Mexico. Cebolleta is an advanced uranium exploration project with a historical inferred uranium mineral resource of 5.6 million tons at an average grade of 0.17% U3O8 equivalent, with almost 19 million pounds of U3O8 equivalent, according to a 2014 NI 43-101 technical report prepared by the previous owner, Uranium Resources. As this is historical in nature, it needs to be re-examined. The confirmation drilling program will focus on Area 1 and will link several generations of historic drill holes that have identified 7 surface mineralized horizons at the company's flagship Cebolleta project. The program will be the company's first step in establishing a current resource estimate. Upon completion of the first phase of the drill program, the company will conduct 2 additional phases in Area 3 and select infill drilling that will allow for the release of an updated NI 43-101 compliant resource. Initial results should be available expeditiously soon. Concurrently, the company has already commenced permitting plans for Phase 2 and Phase 3 drilling. Phase 2 is expected to allow for 20 to 30 confirmation holes in Area 3 of the project. The company expects Phase 2 drilling to commence in the first quarter next year. Phase 3 is expected to begin in the second half of 2024. US Critical Metals, together with its wholly owned subsidiary US Energy Metals, acquired an exploration and joint venture agreement effective on 15 September with respect to the McDermott lithium project in Nevada with Life Energy Minerals, a publicly traded British Columbia company listed on the CSE, and its wholly owned Nevada subsidiary Lithium Valley Holdings, which gives the company the option to earn up to 50% interest in the project and another option to earn an additional 25% interest, bringing its total interest in the project to 75%. US Critical Metals has interests in 2 leading lithium basins in Nevada, the Clayton Valley and the McDermott Basin. Nevada is the only lithium producing state in the US. The McDermott caldera includes Thacker Pass, a construction stage project positioned as the first lithium clay producing project in the US. The McDermott caldera is potentially the largest source of lithium clay in the world, and McDermott Lithium East covers 6,508 acres of Bureau of Land Management claims with a preliminary surface sample of 1,907 ppm lithium. It is also in a geologically strategic location on the edge of the McDermott caldera. similar to the Thacker Pass project located 19 kilometers to the west. This is good news for USCM, and we see the company as significantly undervalued. You can also find all the information on our Commodity TV app in German and English, as well as everything related to commodities. We appreciate a like and, more importantly, subscribe to our TV channel. Please note the following disclaimer. The stocks discussed are or will become part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.